I'm Rick Plum with this week's Lucia Capital Group weekly video. Why does it seem as if the cost of college education just keeps going up every single year? Well, probably because it does keep going up. Planning for college expenses can be difficult when you have no idea what it's going to cost in 10 or 15 years. On the other side, will there be a public university option down the road? This is a big problem for those who are trying to save. And while you can't do much about the actual cost of a college education, there is a little-known tax credit that just may allow you to get a chunk of that money back. It's called the American Opportunity Tax Credit. And if you qualify this year, you could get up to $2,500 of your taxes refunded to you for each eligible student in your household. Again, this is a tax credit, which is not the same as a tax deduction. A deduction reduces your income, and the amount of money you save is based on your marginal tax rate. But a tax credit reduces your taxes owed dollar for dollar. And the American Opportunity Tax Credit is just what it says, a tax credit. The formula used to calculate it's a little odd, but if you're eligible, you'd be able to get a credit of 100% of your first $2,000 in qualified education expenses, plus 25% of the next $2,000 in qualified education expenses. That's a total of $2,500 per student. So let's say you spend $4,000 this year on qualified higher education expenses. In that instance, you'll get back the first $2,000 in its entirety, plus 25% of the next $2,000. That's $500. And that's a total of $2,500. So what are qualified expenses? For the purpose of the American Opportunity Tax Credit, it would include tuition, fees, books, supplies, and other necessary things like lab equipment. In order to qualify for it, you or your child would have to be pursuing a degree at a qualified institution. And the credit can only be claimed for expenses you had during the first 4 years of education. After that, you can't use it. Now, like a lot of tax credits, if you make too much money, you get phased out. To claim the full credit, your modified adjusted gross income must be $80,000 or less if you're single, or $160,000 or less if you're married. But one big benefit is that it's partially refundable, which means that if it brings your tax liability all the way down to zero, you could get up to $1,000 as a refund. That's pretty cool. Now, if you're a student or if you're paying for college on behalf of a student, it could really benefit you to find out if you're eligible to claim the American Opportunity Tax Credit this year. As long as you meet the criteria, you could see some nice rewards at tax time.